where America goes for funding. Your direct nationwide lender now for the last 20 years. Give us a call, text my office if we can help you. 832-431-6331. Tonight we're talking about the new Fannie Mae program that's come out with no credit score requirement. So that's a huge update right now, what's going on in the market. So you can actually literally buy a home effective in 2026 without a credit score requirement. So I'm going to go into the details and talk about that tonight and some of the new programs that we have that we released. So it's a huge update. If we can help you, if you have any questions, please reach out to us. Give us a call, text my office, 832-431-6331. So those of you guys that don't know who we are, we're a nationwide direct lender. We do Fannie Mae, Freddie Mac, hard money, bridge lending, commercial construction, CRE. We do multifamily, HELOC, industrial, land loans, construction, investor, DSCR, ground up construction loans, all different types of financing packages that we've been doing for over the last 2 decades. We're a direct lender and a broker. We work with all different types of lenders and financing companies. We also do business loans. So we work with brokers, we work with loan partners. So if we can help you with any type of financing, please reach out to us, give us a call or text us. You can reach out to our office at 832-431-6331. All the links are also down below to get signed up for enrollment if you want to get pre-approved with us. So for the Fannie Mae program, those of you guys know Fannie Mae and Freddie Mac, that's a conventional loan program that lenders can originate, and then they can get those loans securitized for the secondary market through Fannie Mae and Freddie Mac. Historically, you needed a 620 or higher credit score to be able to get approved for these type of loans. Now, that's the published credit score that they say that you need. I'm going to tell you that in my experience, you actually need a higher credit score than that. It's closer to like a 700 score that's actually required. Now, the news is apparently, in the article will be published down below too, that starting in January of 2026, the credit score requirement will go away. You'll no longer need that. And there'll be no credit score requirement. It'll be based on your assets, the loan to value, your debt to income ratio. But you could potentially have a 500 credit score and get approved for a home loan with as little as 3% down and get a low 30-year fixed rate. The Fannie Mae rates are like 5.9% today. So obviously, what you qualify for, the down payment, the rate you're going to get is all contingent on the automated underwriting system. Remember, with Fannie Mae and Freddie Mac, it's automated underwriting. It's not a manual underwrite. That means it's not a individual underwriter that's actually going through and manually underwriting your loan. They do review the loan for accuracy and completeness in reference to the findings, but they're not actually going through and underwriting the loan like a non-QM loan or a commercial loan or anything like that. So it'll be interesting to see, because like right now, if you have below a 620 credit score, you have to go with an FHA loan, and those are with 3.5% down and mortgage insurance, which I still think is a very good loan program. But obviously, I think the reason why conventional, Fannie Mae and Freddie Mac are doing this is to compete with FHA. And you see these agencies, they try to go back and forth, and obviously to make home ownership more affordable, the conventional loan limits are much higher than FHA. And house prices have skyrocketed. So that part makes sense of why, they would want to try to compete with FHA. Because right now, if the FHA loan limit's $500,000 and the conventional is $800,000, most homes are higher priced. And so the person can't buy the house because they don't meet conventional requirements. So the thing that's what's going to determine, what you get approved for with conventional, obviously you still have to have the ability to repay, your debt to income ratio, your assets, your job, your employment, all these different things. If they're not going to use credit score, they're still going to have to use those inputs into the algorithm to determine what you qualify for. So we'll see how it all shakes out, but it's going to be very interesting. That's one thing I can tell you for sure. If anyone has any questions or comments, feel free to hit me up down below about these programs or any of the other programs that we have. The other program that's really hot right now that's also going to be rolling out for January 2026 is the 50-year mortgage. That's expected to drop your payments as much as 17% compared to a 30-year loan. So instead of doing a 30-year payment plan, it's going to be a 50-year payment plan. And the delta on that's a 17% payment drop. Obviously, you're on the hook for another 20 years, but most people are not going to stay on the loan for 50 years. Nobody really does. The average person stays on the loan 5 years, but it gives you a lower payment. It will be a higher interest rate than a 30-year fix. Like a 30-year fix right now, if it's at 6%, the 50 years at 6.5%. So just be mindful of that. We have not started to take applications for that yet. I don't know exactly the date that it's coming out. I'm being told the first quarter of 2026, but I don't know for sure when it's going to be released. But it'll be very interesting to see. You know, I can't even. I mean, I know we have 40-year mortgages, but I guess 50 years is the new thing. You got to do what you got to do to make homes affordable, and I know that's a big deal, right? I mean, whatever you can do. I mean, getting rid of the credit score requirement. The thing is that at the end of the day, no matter what, you still have to make sure the person has the ability to repay. There has to be a responsible lending. It has to make sense. Obviously, you know, if someone had a 500 credit score and you could document there was extenuating circumstances, whether there was a health issue or a family issue or whatever, and they can show they can make the payments now. For example, if they're paying rent, you know, then that makes sense. But if they've been completely reckless and they're not paying anything, then I think it's going to be hard to justify to give someone a mortgage in that situation, in my opinion. Obviously, you know, you got to look at the, you know, different things that are out there, but that's just my thoughts of, you know, what is going to be important in the underwriting analysis, because you don't ultimately want these loans to go in default. They need to perform. And you have to make sure the person has the proper debt to income ratio, the right job, the right assets to be able to make the mortgage payment. Obviously, things can happen in the future, but I think it's important to still look at these key indicators and underwriting a person's loan, especially for a primary residence. Obviously, if it's an investment property or it's a secondary home, that can be completely different in underwriting. But for a primary residence, I still think that these other things, and I'm not, and my thing is that credit score shouldn't be the main driver or determinant for approving somebody's loan. It's important, but the income, the assets to me are more important and supersede that. Okay. So we'll find out. We'll see what happens as we go through this. I mean, time will tell. But if we can help with any type of financing packages, like I said, please reach out to us. Call or text us. This is a new update for 2026 with the Fannie Mae getting rid of the credit score. If we can help you, please reach out, give us a call, text my office, 832-431-6331. It's where America goes for funding. Don't forget to get signed up for our loan partnership program. If you want to get paid for your referrals, all the information's on that. You can click on the links below to get signed up for enrollment, or you could forward this information. Please don't forget to subscribe, enable notifications, like that bell, get this out to your friends and family, anyone that you know that needs help. We're here to help you with the funding programs. We also have our real estate university, the platform that we built to help you to get you into, you know, real estate, to become a top producer, a top closer. So please give us a thumbs up. Don't forget to share, enable notifications, get this information out. We'll do some other live videos this week. If we can help you with that type of funding, the links are down below for enrollment. Get signed up to get pre-approved. Call or text our office if we can help you. 832-431-6331. It's where America goes for funding, guys. Thank you so much.